You're listening to Alternative Investor Mastermind, where we do a deep dive on alternative investment opportunities and the lifestyle it can create. Join Jack Krupey as he presents actionable tips and tricks in doing passive real estate away from mainstream strategies. Go beyond the usual fix and flips and try less explored yet rewarding investing ventures, from multifamily properties, mobile homes to cryptocurrencies. Do not miss this opportunity to escape traditional assets and finally create wealth without Wall Street. Now your host, Jack.
No discussions in the podcast are meant as an offer to sell or a solicitation for an offer to buy any security. All investments should be done after careful review and consideration of the investment documents and disclosures. Contents discussed in the podcast are not meant to be construed as an investment, tax, or legal advice. Individuals should always consult his or her own professional advisors before any investment decision.
Hey everybody, this is going to be part 2 of my conversation with Sean King. We had a great conversation, talk a lot about Bitcoin. We talked a little bit about technology, politics. It was a wide-ranging conversation. We've got some great feedback on part 1 of the episode. It's one that we're really proud of here. So tune in, take a listen. If you missed part 1, go back and listen to part 1. We'll put the link in the show notes and join us for part 2.
This is where we disagree. I just, I look at, especially if you could lock in a relatively low interest rate, as I look at real estate as part of the hedge. Mm-hmm. I'm just curious, other than like a Great Depression where no one could afford to pay their rent and they're on the breadlines, how do you see the bubble bursting and how do you see real estate kind of being lumped in there?
So it's not that we won't have real estate, and it's not that real estate won't be valuable. It's just that real estate won't be many multiples of what it is today. If you have, remember, even if you lock in a low interest rate today, that doesn't guarantee that the value of your property that's serving as collateral for your loan isn't going to fall. And so what happens if interest rates go up to 20%? Entirely possible. In fact, I don't know that we'll get to 20, but we could easily see low, mid, high teen interest rates, maybe even significantly more than that, when the Fed starts letting inflation run higher than the interest rates. It'll do its best to keep interest rates down, but we can see those higher interest rates, and we can also see Bitcoin taking a lot of the wealth, a lot of the capital, attracting a lot of the capital away from these other assets. And as that happens, especially if it begins to take capital out of the bond market, and I believe it will, you're going to see interest rates go up dramatically. And if you see interest rates go up dramatically, the value of real estate's going to decline. Real estate is one of the most leveraged assets out there. And when interest rates go up, the value of leveraged assets go down. It's pretty much that simple.
Yeah. That's where I agree. And we've seen it on the commercial multifamily apartment side. A lot of loans were tied to SOFR because these were apartment buildings that we would buy, renovate a bunch of units over 1 to 2 years, then resell. You've raised the rent roll, you've raised the net operating income, and all of the investment real estate trades on a cap rate multiple on net operating income. So even though the interest rate doesn't affect, it's not part of the cap rate calculation. What happened was the cost of borrowing goes up. So the new buyers want a higher cap rate and a lower price, and commercial, certain buildings drop by 20, 30%. And obviously there's the office building outliers that drop 90%, but that's a whole different thing. But
COVID related stuff like that.
But just dollar for dollar on like a multifamily apartment building, some of the values are down 20, 25% from the peak just from rates moving where they moved. But it's interesting when you talk about rates being in the double digits. So right now we're in a pivot that, I think you mentioned may take maybe a 10-year cycle. So it seems like rates are going to drop for a while, but do you think the next swing of the pendulum could be much higher rates than now? Or are you thinking 10 years out when there's a real crisis and the rest of the world's maybe pushing for some austerity and pushing back on inflation, that it sort of forces the Fed's hand and
Yeah, well, I think that it's a good question. I think in the short term, rates are probably going lower. I think most everybody's agreeing on that, which actually might not be a good thing when the consensus is so heavily weighted in one direction. You got to you got to look out for the other shoe to drop. But I do think that everybody's expecting in the short term rates to go down. I expect them to go down. Even at the current interest rate, the government is adding $1 trillion in new debt, I think every 90 days at this point, the U.S. government. Absolutely unsustainable. And the only way to lower that is either cut spending dramatically, which basically means you either have to cut defense or entitlements, because that's, 70-80% of the budget at this point, maybe more than that. Actually, one of the issues is that if you count interest on the debt plus defense plus entitlements, spending is more than receipts, or has been in the last couple of years. The only way to help get that back down to where spending is less than receipts, just on those things, that doesn't count the general spending, just interest, entitlements, and defense. The only way to get that down really is either cut those things, cut interest rates, cut entitlements, cut defense. Cutting entitlements is political suicide. Probably not going to happen. Cutting defense is probably not going to happen given world tensions.
It's also,
the only thing you can cut is interest rates. So I do see interest rates going down in the short term.
Yeah, and I think cutting defense is maybe not immediate political suicide, but it's essentially, I look at defense as somewhat of a jobs program. I mean, that's high paying jobs, building airplanes, that would, I think, significantly cause a recession. And that's one of my fears, at least on the Main Street side of things, is if there is austerity, so much of that government money that does flow into the economy drying up is probably going to cause a major recession.
Yeah. And if you cut interest rates right now, we just talked about this earlier, what's probably going to happen? Inflation's probably going to go back up, maybe even higher than it was, just a couple of years ago. What happens when inflation goes back up? The Fed has to raise rates. So if inflation goes to 25%, the Fed's going to raise rates to 20%. The Fed's not going to want to raise rates above inflation because they're going to want negative real interest rates in order to inflate away the debt, like they did in the 1940s after the World War II debt. But yeah, if inflation goes to 25%, 30%, I could easily see that happening as a possibility. You're going to see interest rates at 15, 20, maybe even more than that percent.
Scary thought. And I spent a couple of weeks in Argentina last year, and they've had 100% inflation. And granted, they don't control the reserve currency, but it's they've lived like that on and off for a couple decades. Really, since the 80s, there's been one currency crisis after another, and it's 50, 60 years of just money printing and not having any fiscal responsibility and just not cutting entitlements. And it's just wild.
Same thing we've been doing. And the only reason we haven't had that is we have the world reserve currency. And so we're able to export a lot of that inflation is one effect of that. But it's no longer in the U.S.'s interest to continue to function as the world reserve currency. It cannot afford to continue functioning as the world's reserve currency for another 50 years. So sometime between now and the next 50 years, probably now in the next 10 to 20 years, it's going to be backing away and be used less and less as the world's reserve currency, not because other people force it to, that would be some small part of it, but because the U.S. will want to back away, it will need to back away, it will have to back away. When you operate the world's reserve currency, you almost by definition have to be running massive deficits, trade deficits. And we have hollowed out our manufacturing base. We saw what happened during COVID with supply chain disruptions when you're relying on, Asian manufacturers. China's getting increasingly aggressive. The world is getting increasingly tense and moving towards war. We need to bring that manufacturing home. Everybody knows that. Everybody recognizes it. That cannot be done, or at least near shore at Mexico, Colombia. That can't be done.
I think I know where you're going. It sounds like some Peter Zeihan stuff, but really just
we can't bring those things. We can't bring those things home while we're maintaining the dollar as the world reserve currency. The dollar has to go away as the world reserve currency in order to be able to bring that stuff back in numbers that we need to bring it back in.
Cool. Let's pivot a bit because we talked about Bitcoin, great stuff on the economy. I know there's, obviously a lot of other coins out there. I personally have some Ethereum. I believe you've talked about a few other ones. I think maybe like Chainlink. To someone who's just completely, maybe heard of Bitcoin, obviously, but really hasn't had any other experience with crypto. Maybe like talk through a few of the other major coins that maybe people should pay attention to and what the functions are.
Sure. So, yeah, I actually am not as up to speed on, it's just growing so fast, so many different coins and projects and tokens. I can't keep up with all of them. So I'll just mention a few that I think are interesting. I do find Ethereum interesting as an ecosystem. Not just the Ethereum blockchain, but there's now a whole group of Ethereum compatible blockchains that essentially run on the same standard, and they can interoperate, they can specialize, they can do their own thing. And so it's building out into this really interesting ecosystem that I think can power DeFi or decentralized finance, decentralized exchanges, and lots of other things. So that's a really interesting system. There are some scaling challenges they've been wrestling with for a decade now. And, many of the initial ways they thought they would resolve those scaling challenges hasn't worked out. But I do think that having other chains that interact with the Ethereum chain is one potential way of solving that challenge in some contexts. And we're seeing that in real time. And I do think that has some significant potential going forward.
Yeah. Now, I was trying to explain Ethereum to somebody, and I'm just curious if you think this is a good explanation or if you have a better one. I was saying, imagine that when the internet was starting, and when you go to a website, you had to type HTTP://. Imagine if you could buy stock in that, whereas every website someone went to, there was a small toll charged, and that's how that entity makes money, and you would get a little piece of that because everything that's done, a little toll, I think it's called gas, is burned. And that's sort of how I described it, as like almost like owning a piece of a technology company that's decentralized, where you get a little piece of every transaction.
Yeah, I kind of like that analogy. TCP/IP is the standard that the internet is really built on. And Ethereum is kind of, you can think of Bitcoin too, you can think of any blockchain really as kind of like TCP/IP. It has been made scarce. Aspects of it has been made scarce. So imagine if TCP/IP, which powers the internet, were a scarce commodity. Everybody wants to be able to use TCP/IP to build on top of, to have websites, to have other things. And if it were scarce, if it weren't just an unlimited sort of commodity like TCP/IP is, just computer code that can be replicated over and over and over and over and over, it would have real value to it. Real value to it. I mean, imagine the value of the internet itself, right? Trillions and trillions of dollars of value at this point is what the internet is actually worth. But nobody really owns the underlying infrastructure for it. So I like your example with Ethereum and some of these other blockchains. It's almost like TCP/IP, but it's a scarce commodity that people need in order to build these other projects on top of. And so when you have a scarce commodity with demand, what happens? Price tends to go up over time. So the more and the bigger the ecosystem gets built, the availability of their underlying commodity isn't growing as fast as the overall ecosystem is, the ETH or whatever. And as a result of that, the price goes up. So yeah, I think that's a decent analogy.
Great. And then I've gotten, I've heard a lot of people over time be like, well, what do they actually do? I think you've written about, I don't know if this is still, it's been a couple of years, I think, but, Chainlink is an example of other tokens that actually have a real purpose that, might, people that are not in the crypto space at all might identify with, of ones that actually have real utility to do things.
Yeah. So one of the really neat things that you can do with blockchains that we've never been able to do before until Bitcoin came into existence, and then Ethereum and now many others. One of the really neat things that you can do with it is you can write what are called, people call them smart contracts, and I hate that word. Basically, all it is a computer program that runs on the blockchain, not on a server, on the blockchain. The blockchain, again, is a decentralized mechanism where people agree on the status of the network, including these particular computer programs called smart contracts that can run on it. So you could have a very simple smart contract, for example, that is a lottery, where the contract runs on the blockchain. Everybody who can read code can look at that contract and see the programming of it. So they can vet it for themselves to make sure there's no backdoors or cheats or whatever. And the deal with this contract could be that for every 90 days, people can send it 1 ETH. So you could send it 1 ETH, I could send it 1 ETH. People around the world are sending it 1 ETH. Every 90 days, it will randomly, using a random thing, look at all the addresses that sent it 1 ETH, choose one of those addresses, and return, say, 95% of the ETH to that address. It's a lottery. Everybody's putting in 1 ETH. One person's going to win 95%. The house keeps 5%. The smart contract, whoever wrote that smart contract, developed it, keeps 5% for its fee. Now, somebody else will come along and write a new contract that only keeps 3%. Another one come along and write a new one that only keeps 2%. And whoever offers the best return is going to get most of the money. But that's an example, right? And you can do that for on-blockchain stuff. It can be self-executing. We don't have to trust anybody. The ETH that you send to that contract is held in escrow on the blockchain. Nobody can steal that ETH. Nobody can get it. Nobody can disrupt the function of that smart contract. It will, every 90 days, choose one of the addresses that sent it as a winner and send them 95% in my example. The problem is, how do we do the same thing with real world assets that are off chain? How do we get information about the real world into the blockchain in a reliable way? So let's take the presidential election. There are centralized places right now, what's it called, Polymarket, where you can bet on the outcome of the presidential election. You can put up money, but it's centralized, right? And already politicians are saying, writing letters demanding that the CTFC shut down these prediction markets. And eventually they'll probably be shut down or they'll be regulated or whatever. The point is the government can interrupt it. What if you could have that prediction market on the blockchain as a smart contract? Well, you can absolutely do that. The problem is, how do you get real world information reliably into the blockchain so that the blockchain knows who won the presidential election, so that it knows who to pay out to in the appropriate amounts? Well, this is known in technical circles as the oracle problem. Oracles are people who would know what's going on in the world and provide that information to the blockchain. Well, who do you trust? You just say, oh, well, we're just going to look at what the New York Times says won.
Well, you used to trust them, maybe not so much anymore.
Yeah, exactly, right. So who are you going to trust? Well, what Chainlink has done is it's among other things, it's many things, but among other things, it is a solution or a workaround to the oracle problem. Basically, it's a project where there is a valuable token. Link is the name of the token. And anybody who wants to, you, me, somebody else, can agree. I'm making this really simple, but can agree to act as an oracle. And what we do is we lock up in a smart contract, we stake some amount of money to be an oracle on this particular question of who won the election. And so I may stake, let's say, 10 ETH. 10 Link. I might stake 10 Link. And then I get to be an oracle and I get to vote. I get to say who won the election after the election's over. So if I vote with the majority, so there may be 1 million people who are acting as an oracle here. If I vote with the majority and tell the smart contract who won the election, I get all of my money back, plus a small fee for providing the service. Won't be a large fee because all I'm doing is just telling it who won the election. But if I try to game the system and I tell it that the person who didn't win the election actually did, in other words, I'm voting against the majority of the people, then I forfeit the collateral that I put up. Not only do I not get a fee, but I forfeit the 10 Link that I posted as collateral in order to be able to function as an oracle. And so what it does is basically, unless a majority of all the people get together and conspire to feed that smart contract bad data. It very reliably helps us get real world information into the contract so that you can have these decentralized markets. Very, very important for decentralizing the world. Link really is a huge engine that makes DeFi even possible. Without Link, chain link, what's already being done in DeFi couldn't be done.
Cool. Let's go. I mean, I think it would be probably a rabbit hole to go too deep in DeFi, but given some of the FTX and some of the, big headlines over the last couple of years, let's maybe just kind of, high level kind of state of the market of DeFi. Just any thoughts you have there that could be
so
helpful.
DeFi is basically a fancy name, decentralized finance, for exchanges that run on the blockchain. So all they are is smart contracts, or those programs that run on the blockchain. They are self-executing. People can read the code to make sure that the program actually does what it says. But if I want to trade some, say, Bitcoin for some ETH, I could go to a centralized exchange like Coinbase or like FTX, and I could do it there. But those centralized exchanges can be highly regulated. They can be hacked. They can be corrupted. They can be rug pulled. FTX failed in large part because its owner, who's now in prison, was stealing money and using that money to make his own private bets, which went bad. He basically took customer funds, used those funds to make private bets, those bets that he was going to keep the profits from. Those bets went bad. He lost the customers' money, didn't have enough money to repay the customers, and the whole exchange went under, and he ended up going to prison. People lost lots and lots of money as a result of that. That's the problem with centralized exchanges. Well, imagine if you could do the same thing on a decentralized exchange. So I could send some Bitcoin to a decentralized smart contract program running on the blockchain that no centralized party controls. I know that that program is going to run just the way it says, and I can send it and say, hey, I want to convert my Bitcoin for ETH at the market rate. Well, how's that smart contract going to know what the market rate is? Chainlink, exactly. So this is what kind of helps power DeFi, and I can do that. And now I can exchange my Bitcoin for some ETH in a very decentralized way, where I don't have to trust any centralized party. Can't be regulated, can't be seized. The money can't be rug pulled, can't be embezzled. etc. So it's 1,000 times better than centralized arrangements in some ways. There are some scaling problems with it that still have to be worked out. There's some lag that you don't have in centralized exchanges. There's some what's called slippage, price slippage, that you don't have so much in decentralized exchanges. But I'm confident that all of those are going to be worked out. People like Larry Fink, BlackRock, are now saying that DeFi is going to be the future. Every asset is going to be tokenized and traded on the blockchain, including real estate eventually, rather than going down to the Register of Deeds and transferring pieces of paper at the Register of Deeds. If you want to buy my house, well, it'll be a smart contract escrow. You'll send them the Bitcoin to buy my house to that smart contract. I'll send the token that represents deed to my house to that smart contract. An Oracle will confirm that, yep, that's actually the deed to Sean's house. And then it'll send the deed to you and your Bitcoin to me. All of that will happen in a decentralized way. We don't have to trust it.
It's much needed because, there's been, I don't know how widespread it is, but I've heard many stories of fraud where someone forges a deed, files it with the county, goes out and takes a multi-million-dollar loan out on a property they didn't even own because they forged it, runs away with the money. And
I've not heard of that.
Yeah, that happens. And then there's a lot of...
And there's no way to forge a deed on a blockchain.
Exactly. And then even on the closing process, people have to be very careful. That's why you verbally verify wire instructions. A number of title companies have been hacked, and then so they hack one of the employees. They look at the closings that are going to happen, and they send the wrong wire instructions to potential buyers who wire in hundreds of thousands of dollars to the wrong account. And there's really no way to get that money back. There's liability insurance, I'd imagine, for. I hope most of the people were recovering through insurance, but it's a nightmare.
Yeah. And now with AI, even voice confirmation is going to be hard. I don't know what, I'm talking to Fidelity. I called Fidelity the other day for my IRA account that I have with them. And, they recognize me by my voice. That's how they authenticate that it's actually me.
Yeah. And that's scary.
What are you going to do in AI when anybody can in a few seconds take my voice from this recording here and cause me to say anything that they would want me to say?
Yeah, that's scary. I mean, I've got hundreds of hours of content on the internet now.
Yeah.
And they can do, and I've seen some pretty cool stuff. There's been some, Joe Rogan's got millions of hours of content, and you can make him say anything.
Exactly.
They faked an interview with him and Steve Jobs, and it wasn't perfect. I think if you really pay attention, you could tell it's a little off, but you could make up things that didn't happen.
It's going to get exponentially better every month. Pretty soon it will be perfect, and it's going to be this is another important use case for blockchains. One of the big challenges we're going to have in the future, enormous challenges, is how do you know what's real? When anybody can create cheaply really good, compelling deepfakes of the president's voice or my voice or my face in a Zoom meeting, and it looks like me, it sounds like me, it talks like me, it uses my vocabulary. How are they going to know whether or not it's actually me? This is going to be a huge problem sooner than people think. And part of the solution, I'm convinced, is going to involve blockchains. I'm not sure how this is going to play out, but something like my iPhone here will have a built-in feature where if I take your picture right now, it will digitally sign it, date stamp it, and then maybe at night, it will take all of my pictures, create a hash of that collection of pictures, and store that hash in a blockchain, Bitcoin or some other blockchain. And then if at any point in the future, it's basically like a notary service, but 1,000 times better. If at any point in the future I ever needed to prove to you that, or anybody, that this picture was actually taken at this date and time at this place, the hash of that picture is stored in the blockchain. So I can take that, run it through a hashing algorithm, compare it to the hash in the blockchain, which was put there 3 years ago on a certain date, and prove with absolute certainty that that picture existed 3 years ago on this date. That's going to be so important for pictures, videos, security footage from security cameras, birth certificates. If this had existed for birth certificates, we never would have had the whole Obama birther conspiracy debate, because Obama would have been able to prove, if blockchains had existed, this is absolutely with 100% certainty a valid, legitimate blockchain birth certificate from 1963. Now, blockchains didn't exist back then. But.
Well, it's crazy. Trump might not have been president then, because that was sort of apparently the thing that got him to really think he was going to decide to run was that White House Correspondents' Dinner where Obama made fun of him for the whole birth certificate thing, and said, well, the one thing I'll be that you'll never be is the president.
Oh, I did not know that. Yeah. That's hilarious.
Yeah. All right, Sean, well, we covered a lot today. Is really, really cool, really helpful. Always enjoy your insights on everything. And it's been a big help to me personally, because when I came down here, I was kind of, it was after the 2017 kind of Bitcoin run, and I was kind of just, over Bitcoin and blockchain. I was like, that's, not a scam, but I was kind of
project.
Yeah. I was like, it's never going to work. And then, when I got down here, you and a number of other people that were, heavily invested personally and also just in the technology, and really educated me on the possibilities of things. So fortunately, I started buying a small position in 2018 and 2019, and just really built it up over time. And it's a good hedge for me right now. It's not it's certainly not an half my net worth or anything, but I think, and I think you've said this too, people, if you have no exposure, you should try to build up at least 5, maybe 10%, just to, if you call it a doomsday hedge, great. But, there's a lot of compelling reasons why, it could, take over from the current monetary system. So
absolutely. And I think virtually everybody needs to have some exposure at this point. I think it is irresponsible to not have some exposure. That's the bad news. The good news is I don't think it takes a lot of exposure for most people. I think probably no less than 1% of your net worth, and 1 to 5% of net worth for most people is, I mean, mine's significantly greater than that, but I really understand this and have deep dived it for a decade. But somewhere between 1 and 5% of net worth for most people, I think is a good number to start with, and then just hold it. And it'll slowly over time likely become a larger and larger percentage of net worth. Nothing has outperformed Bitcoin in the world over the last decade. You go look at the annual returns and there's just nothing that's even close. And I think that's going to continue for the next decade. So if you start out with, 1, 2, 3, 4, 5% of your net worth in Bitcoin, I think that's going to 5 years from now be 10%, 5 years after that be 20%, 5 years after that be 40%, something like that.
Yeah, it's fascinating to look at the charts.
A good way to potentially hedge inflation, a good way to hedge a lot of the risks that we've been talking about, a good way to potentially take advantage of the AI boom, an indirect way, because I do think blockchains are going to be used to store those hashes to confirm the notary service, basically, for virtually everything that gets produced. Pretty much every picture, every video, every document, every birth certificate, every will, all of those things.
Yeah, now obviously it is very volatile, and it's been interesting to see some of those charts of, I think that, that you could look at the chart of the Weimar Republic of like how their currency went up and down before it went to zero. And I think it was you. I think you published some or shared some charts of really the price of a lot of other everyday things in Bitcoin, like housing, cars.
Yeah. The price of housing priced in Bitcoin is down like 99%. So everybody's complaining about the price of housing so much. For me, the price of housing is getting cheaper every single year, and not just by a little. Not every year. There are some years in which Bitcoin has negative returns, but almost every single year, housing gets cheaper for me because I'm storing my significant portion of assets in crypto. So I think for that reason and for many others, having some exposure, especially to Bitcoin. Some of these others are significantly more speculative. Even ETH, I think Ethereum project is significantly more speculative. But I think Bitcoin is almost an essential asset for everybody to have some exposure to at this point.
Great, and it doesn't take much. And for me, I just dollar cost averaged in. So for if you're worried about buying in when it's 65,000 and it was 30 a year ago, you never know. I mean,
and that's something I should point out. And I've talked to a lot of people about this, and sometimes they'll say, well, shoot, I don't have $60,000 to throw at Bitcoin right now, Sean. Each Bitcoin is costing, in excess of 60,000. They don't realize you can buy a fraction. You can buy a tiny fraction of a Bitcoin. So you can go to Coinbase.com or some other exchanges. You could set up a $20 a week buy or a $20 a month buy. And you can buy 0.0003 Bitcoin, whatever. But yeah, you dollar cost average over time and keep doing that. And it likely grow to be a significant sum of money.
Yeah, I think that's a smart way to go. And, at these percentages, it's no different than, a lot of people willy-nilly buy a stock, throw 50 grand into a stock or buy a couple shares of, NVIDIA could go up 50%. NVIDIA could drop 50, 60% this year too. So, it's interesting when I have people that are so bullish on certain things, but then just, for some reason just have a block and are not willing to cross over onto the crypto side.
Yeah. Well, I mean, they're quickly getting left behind. All of your I think Warren Buffett's the only huge anti-Bitcoin person from a decade ago who is still anti-Bitcoin today. Larry Fink was famously anti-Bitcoin. He's now one of the biggest advocates, the head of BlackRock, world's largest investment management firm. Mark Cuban used to be against Bitcoin. Now he's one of the biggest Bitcoin and crypto proponents. Pretty much everybody, with the exception of Buffett and a few others, who has spent any amount of significant time doing diligence on Bitcoin ultimately becomes an advocate for it. It's that important, and it's not something that anybody wants to miss.
Yeah, and that's a lot of jobs as well. I mean, while it may eventually take some money out of the system and make the Fed irrelevant, or maybe we lose our status, but we're going to gain probably hundreds of thousands of jobs between AI and just all the support between, division at BlackRock. You got Coinbase, you got all these other companies that are supporting.
Yeah, the whole ecosystem. The thing about the Bitcoin ecosystem, though, is, in the crypto ecosystem as a whole, is that a lot of it's smart programs self-executing. So once you write the code, there's not a lot of work to be done. And so I can actually see in some ways that, with AI, especially, eliminating some jobs. And I think Bitcoin can be a really good hedge. People ask me all the time, how do I hedge against the possibility of AI eliminating my job? I think Bitcoin's one of the ways, because as AI becomes more predominant, the problem of authenticating things becomes bigger and bigger. And blockchains in general and Bitcoin in particular, I think is going to be one of the main ways things get authenticated from, again, wills and documents and birth certificates and everything. So having 1% to 5% of your net worth, I think, is a really good way, because if AI does become so big that 40, 50, 60% of the people end up going out of work as a result, if you had 5% of your net worth in Bitcoin for the last decade, you're probably in a position to retire at that point, quite honestly.
Do you think AI could have that much of an impact on, I think about this a lot. And, I think about, I have an old colleague who used to talk about buggy whips. When the cars were starting, they're like, oh, well, no one's going to make buggy whips anymore. There's going to be nothing to do. And then there's always been, I guess human nature has always found another way to find additional productivity, but I don't know if this is finally the bridge too far.
Here's why I think that the argument that AI won't disrupt jobs is wrong. The first argument it won't disrupt jobs is that it just won't ever get that good. It just won't get as good as a human will. I think anybody who's paid attention for the last 2 years and seen the incredibly rapid exponential improvements in what it's doing that are not stopping, and everybody who's involved with it says is only going to continue and in fact get faster, I don't think that's a very good argument. The second argument is the one you made, which is, we used to have 50% of the population working on farms, and now we have 1% of the population working on farms, but people are still working, right? Because technology put them out of a farm job doesn't mean there won't be a job. Well, I think that's a wrong argument for a couple reasons. Number one, when you have a AI that can literally do intellectually anything that a human can do, at least as good and exponentially better eventually, and a lot cheaper. What other job is a human going to do, right? The AI can't. That's problem A. It's going to be hard to find a job that AI can't. Even if you could find a job that humans can do that AI can't, you're going to have to train them up to do those jobs, retraining. And AI is going to be advancing on such an exponential curve that by the time they take a year or two to get trained up to do the new job, AI will be able to do it too. Right. And so what people don't get about AI is that the world is going to be changing so incredibly fast that humans just aren't going to be able to adapt their jobs quickly enough. So yeah, people went from working on the farm to getting retrained to work in a factory, and then from a factory to getting retrained to work in services and finance. And that could happen over a period of time when things were changed. It would take 5-10 years for things to change dramatically. But when the capabilities of AI and the impact it's having on our world is going to be changing every year at an exponentially increasing rate, I just don't think humans are going to be able to keep up. The only way humans would be able to keep up is to maybe merge with AI somehow. Maybe humans, cyborgs who have merged with AI, would be able to do some things that just AI by itself can't. And so maybe those humans would be able to keep jobs. I don't know. I think that's an open question.
Yeah, that's a rabbit hole right there. I listened to one of the first Neuralink recipients was on Rogan, and I guess at some point he could kind of play a video game just through his thoughts. They're talking about, maybe they could use something like Neuralink to like have, people had spinal paralyzed that, if you have one on each side of the spine and potentially could have enough to have the thoughts actually, it's crazy what's happening in technology, but it's going to be an interesting 5 or 10 years for sure.
I'm glad to be alive. It's going to be fun to watch regardless of what happens.
Yeah. Then speaking of the health thing too,
a little bit of a disinterested attitude about it, not take it too seriously because it can be overwhelming, but just say, hey man, if this were a TV show or a book, this is one you'd want to be watching.
Oh, absolutely. And, sounds like we may all be alive potentially for a lot longer too. I mean, some of those, AIs can discover things faster than a doctor between, triangulating blood work or scans.
Absolutely.
The early detection, they may, maybe they cure cancer. You never know.
Oh, I think they absolutely will cure cancer. Yeah. I could easily see human lifespans doubling, tripling, quadrupling over the next 100 years.
It's what a time to be alive.
It is.
Well, Sean, thank you so much for coming on, and just a lot of great conversation, a lot of great knowledge. Myself and I'm sure the audience really appreciate it.
Yeah, thank you, Jack. We've been trying to make this happen for a while, and glad we finally found the date that could work for us.
Absolutely. Next time we'll bring some bourbon.
Oh, there you go.
Yeah.
Excellent. All right.
Thank you.
That's all for this episode of Alternative Investor Mastermind. Now that you know the many alternative opportunities out there all up for the taking, you can finally become ultra connected and ultra wealthy. Get more valuable advice from the experts by subscribing to the show at AlternativeInvestorMastermind.com. Become a winner in the world of passive investing today in alternative investment strategies. Thank you for joining us. Until next time.